everyone, today we are going to see about an interesting sum. The question is the following balances appear in the book of Mohan, rupees 1,190, and that means January 1st and 90 in the year of 1990. So the machinery account balance is given as 50,000, and the provision for depreciation account is 20,000. Here provision denotes what means provision means we have take some amount for some expenses. We already planned for that expenses and we kept that amount for that expenses, so that is known as provision for depreciation provision account. So our question is on 1190 they decided to sell a machine of 4,500. This machine was purchased for rupees in 1986. The Mohan purchased a machine of rupees 9,000. Now in 90 in January 1st 1990 he want to sell that machine that is worth is 4,500. You are required to prepare a machinery account. We have to prepare a machinery account and provision for depreciation account for 31st December 1990. So assuming the given accounts, and we have to charging depreciation for 10% in a straight line method. Straight line method is otherwise known as original cost method and final installment method likewise. So we have to use a straight line method and frame this and solve this question. So let me see our answers. So first what we do means we have to take the machinery account. So machinery account is as usual, we have to put a date particulars amount and date particulars amount. So we the given amount is that is machinery account they given us 50,000. So we take that 50,000 and place in January 1st 90 they have a balance brought down, that is 50,000. They already given in a question of 50,000, so that only I placed here 50,000. And in this side we have to put for depreciation and some sales, and we have a gain profit or loss for that year. So we don't want to put all the years, we have to finalize the years of in 1990. Doing a year of 1990 is enough for this type of questions. So and here having a by provision for depreciation account, we don't need to take this provision for, we have to assume that as a depreciation. What we do, depreciation is usually do, we have to take a purchase. Here purchase is 9,000 and depreciation is 10%, 10 divided by 100, and it is from January 12, that is 12 month we having 12 into 12 1. So cancel these two zeros and we have 900, and we have to calculate a depreciation for total. So from the year 1986 to 1990, so 86, 87, 88, 89 and 90. We don't want to take this 86, so we have to calculate from 87 to 88. So 1 2 3 4 years. So depreciation, calculated depreciation of 10% into 4 years is 3600. So that only we placed here 3,600. Then by bank is nothing but sales. We had sell that machine of 4,500, so that only placed here 4,500. And we have to calculate by profit or loss account, if it is gains a profit or loss. So we purchased a machinery for 9,000, and what that we have a depreciation of 3,600, and one more thing is we had sale that machinery of about 4,500. So our total cost for this is 0 0 and 11, and what is that, 8,100. So our purchase of cost is very high from this book value. So there we from here we know that we had a loss. So the profit or loss account, loss on the sale of machineries, the difference between 9,000 and 8,100 is 900. So that only we placed here, and we have to add means, so the by balance carried down is 41,000. So we equalize this terms 50,000 and 50,000. So this is the end of the machinery account ledger. Then now we want to go to the provision for depreciation account. In question they are asking for machinery account and provision for depreciation account. So date as usual, date particulars amount and date particulars amount. So here also given that provision for depreciation account is 20,000. So we take that by balance. In provision always written a credit side, and machinery always written in a debit side in a ledger. So by balance brought down is 20,000. Then what we do means, to machinery account we have to place here no by provision for depreciation, so that 3,600 can be written in this form of to machinery account. So our journal form will become as provision account to machinery account. So this only placed here, and this one provision account is in this place. So we frame that. Then by profit or loss account, from we have to calculate from 50,000, that is machinery account 50,000. So 50,000 minus we purchased of we purchased a machine for 9,000. So if we less means we get 41,000, and 10 percentage depreciation is 10 divided by 100 equal to 4,100. So if we add means we get 24,100. So to balance carried down is 20,500 for this sum, and we these two terms get equalized. So this is the solution. Hope you all understand, and thank you. If you have some if you have any doubts, please share in our comment section. Thank you.